power of three explains how the market accumulates, manipulates, and distributes. However, most traders only understand this at a surface level. Not just about identifying where the market's accumulating, manipulating, or distributing. It's actually about timing where this is going to happen and being able to capitalize on it when candles are printing live. And in this video, I'm going to show you exactly what the power of three is, and also giving you a time window to look for price to accumulate and manipulate so you can trade within the distribution legs. The main thing that we're going to go over for the power of three is understanding the 4-hour candle and understanding accumulation, manipulation, and distribution, and how it comes together with this one 4-hour candle that we have that prints every single day. So what you actually need to understand is the market trades within cycles, and these cycles can be viewed as forms of accumulation. So this is where price is accumulating and building up orders within the market. And then we will manipulate, so we will trade lower and take out the sell side liquidity, so bring in sell orders into the market. And then the market will distribute, and this is exactly the cycle that it will continue following for the whole day. So this is basically the fractal that accumulation manipulation is going to look like. It's either going to be price accumulates inside of a consolidation, and then we have a one-sided move, and then price pushes to the upside. So this is going to include one 4-hour candle, and this is exactly what it's going to look like. This 4-hour candle is going to open up, drop down lower, and this is what is going to be viewed as the open low. However, we're viewing this as the accumulation for the 4-hour candle, the manipulation lower, and then we are looking for price to push to the upside. And this move to the upside, what is this? This move to the upside is actually the distribution. So this is where we want to position ourselves in. When we are bullish, we want to buy the market once it opens up, manipulates lower. We want to buy it from a key level or a liquidity pool. And this is exactly how my blueprint model is going to come into play for understanding exactly when to buy and sell using this logic. Again, we have the same scenario when the market accumulates, pushes to the upside, so this is the manipulation, and then we drop down lower. So again, what is this viewed as the 4-hour candle? When the 4-hour candle opens up, it opens, pushes higher. So this is the open, high, low, close. So exact same logic that we spoke about when the market's bullish. You're flipping it on its head and using the same logic when we are bearish. So you can see this is going to be the accumulation of the 4-hour candle, this is going to be the manipulation, and this is going to be the distribution. Exact same fractal, but this is going to be one 4-hour candle, and this is how it's going to look like on the 5-minute or the lower time frame. And now let's break down the exact 4-hour candle that you should be focusing on, how you should be building your model and strategy. The two 4-hour candles that you're going to focus on is going to be the 6 a.m. 4-hour candle and the 2 a.m. 4-hour candle. So this is where my blueprint model is going to come into play. So my blueprint model for the New York session is waiting for 9:30. So this is on New York time. So 9:30 right here. And if you're trading the London session, you're waiting for 3 a.m. So why are these two times very significant, and how do they come together with the 4-hour candle and the power of three? So as you understand, the power of three is accumulation, manipulation, and distribution. You are waiting for the manipulation to trade the distribution. So for the New York session, what I found is 9:30 is typically the manipulation, and for the London session, 3 a.m. is the manipulation. So again, this is where we open up. So at 2 a.m., for example, we open, push down lower. As we push down lower, we create a range. And then at 3 a.m., we are looking for price to hunt the range. So we have sell side below here, and we have buy side above this high. At 3 a.m., price will hunt liquidity. So there we go, we drop down lower. As we drop down lower, what is this? This is the manipulation, because the 4-hour candles opened and dropped lower. So this is the open, low that we are anticipating, and then we will look for a change in delivery for price to show us that it wants to go to the upside. And what will you be trading? You'll be trading again the distribution. This is how the 4-hour candle is going to look. We push to the upside and then we close off. So this is where the distribution is going to form. So this is the open, low, high, close. So we have one 6 a.m. candle and we have one 2 a.m. candle. This is going to be a 4-hour cycle where 4 hourly candles go into this. And we are basically breaking down these 4 hourly candles and being able to anticipate when the liquidity is going to be taken. So 3 a.m. and 9:30. So this is typically the mean threshold for a manipulation. Once you've identified the manipulation, we can then trade the distribution within the market. And this is why my blueprint model is so consistent, because you are waiting for the manipulation to trade the distribution. So as we went over the 2 a.m. 4-hour candle and the significance of 3 a.m., now let's go over the 6 a.m. 4-hour candle and why 9:30 is important. So for example, this is where we open up at 9:30, we accumulate and then push to the upside. So we are creating a range within the market. Dealing ranges are very important because you are able to identify where liquidity is resting within the market. So here we have a range. range. So we are looking for price to hunt liquidity at our magic 930. So once price hunts this liquidity, we are waiting for it to distribute within 30 minutes to the opposing end of the range. So this is where we have the A, M, D. So we have our accumulation, manipulation, and then distribution. And the 4-hour candle is going to look like this: the open, high, low, close. And this is exactly the logic and the framework to all of my trading setups, using a 4-hour cycle, breaking it down into hourly cycles, and being able to identify when the manipulation is going to take place to be able to trade the distribution. And now let's go over a few chart examples for an easy understanding. Now we are going to break down the fractal of this one 4-hour candle that forms at 2 a.m., how my 3 a.m. blueprint model comes together with this 4-hour candle, and we're also going to break down how it looks like on the higher time frame, so as the 4-hour candles are actually printing. So if we look right here, we have 2 a.m. So this is where the new 4-hour candle opens up. As this new 4-hour candle opens up, what happens? The market opens and pushes to the upside. So this is where the market makes no low. So once the market does this, you already know that this is the manipulation for the 4-hour candle because it's made no low. So we have to make a low of this 4-hour candle. So as we push to the upside, you know that this is the manipulation. However, you're looking at 3 a.m. So right here, this is where you're waiting for liquidity to be taken from the market. So we have a high and we have a low. So this is a range made before 3 a.m. So once we make this range, you need to identify the high and the low, and then 3 a.m. you're waiting for price to hunt one side of this range. So as you had the knowledge of this 2 a.m. candle, and this is the 4-hour candle, you know that price is just pushed to the upside. So all the 4-hour candles done is manipulate. So you're going to look for it to distribute into the low of the range and trade below these failure swings. 3 a.m. we push higher, take out the buy side liquidity, and then what happens? We make a fair value gap right here, and we make up close candles. So you want to see the market close below these up close candles and trade below this fair value gap made within the market. Once we do this, you know that this market is actually bearish and it does want to trade to the downside as we change delivery, and is showing that it is a bearish market. So you can sell into up close candles because you know in a bearish market, up close candles are going to support the market to the downside. And as you can see, we trade into this up close candle and then sell off and trade into the sell side liquidity. On the 4-hour time frame, you can see we have 1, 2, 3, and then this is our 4th hourly candle. So the 4th hourly candle is actually 2 a.m. So if you watch my video on daily bias, I will explain why 3 candles in one direction. I'm not going to look to trade the same expansion. I want to trade the reversal. So here we have a fair value gap. I want to see the market come back to this level. So if I want to see the market come back to this fair value gap, how am I going to frame my trading setup? I'm going to frame my trading setup based off this 2 a.m. 4-hour candle. As we open up, we push to the upside. So ideally, I want to position myself in around the high of this candle. So if I'm positioning myself in at the high, I'm looking to take profit within this fair value gap and this fair value gap right here. So if we go back to the lower time frame, which was the M5, we'll be able to refine this even more. So just refining what we saw on the 4-hour time frame, you can see 2 a.m.'s candle push to the upside, but we are using 3 a.m. for our context to hunt liquidity. We trade above the buy side liquidity, changing delivery. This is where you can trust selling setups to trade into the sell side liquidity. And this is how it looks on the 4-hour time frame. But this video, I wanted to put an emphasis on my blueprint model because that's going to give you the context of understanding the power of 3 and understanding when to hunt for liquidity within the market. But with that being said, if you made it this far into the video, make sure to leave a gem emoji in the comments down below. And as always, I'm rooting for you and I hope you find success in this business. Enjoy the rest of your day.